Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined by Nicole Dines and Dan Innes. Nicole, let's start with you. What have you been tracking?
Real Asset Media with Savills held a briefing on logistics trend 2022 to see what the outlook is for the sector. And it seems that nearshoring is very much a code word and it's been transforming the sector's outlook. There's been a real decoupling between the logistics demand, which keeps growing. It's already strong, but keeps growing, and trade growth, which is pretty modest, as you'd expect with such, economic headwinds. So companies really want to hold more stock. They've learned their lesson from, the upheaval, the pandemic, and the war. They want to hold it closer to the end user, to their consumers. Oliver Salmon of Savills said the international trade accounts for 20 to 30% of global carbon emissions. He said that makes offshoring incompatible with the net zero targets that companies and countries have set themselves. While Kevin Mofid of Savills said that the tailwinds continue to be much stronger than the headwinds for the logistics sectors. In H1 2022 this year, over 20 million square meters were transacted, mostly in Germany and the Netherlands were much ahead, but also very strong performances, stronger than last year, from Poland and the Czech Republic, which seem to be counterintuitive given what's happening in Ukraine. But in fact, companies seem to really want to have logistic assets in those countries because they have lower labor costs and strong environmental credentials in place. So demand continues to rise in any case across Europe, and rental growth, double-digit growth. I mean, in the UK, it's something like 40%, but across Europe, it's double-digit. Vacancy rates are record low, so everything looks pretty good for logistics. And the Savills Analytica census 2022 on the sector's results show that 90% of respondents say they either want the same amount of space or more space over the next 3 years. So again, favorable outlook. For investors and occupiers, rising rents are surprisingly the main concern. But the feature that is really interesting that has been top rated in terms of importance by the respondents to the survey is flexible lease length. It's gone up from number 3 on the list to number 1 this year. And that shows that there's clearly some uncertainty. But Michael Hughes of Virgin said that now that there are economic and geopolitical headwinds, it's really a time for sector specialists to step in rather than rely, as he put it, on the magic market to do all the work for you. Real Asset Media also had another briefing on the Netherlands, which is very much sought after by investors. But it is in a bit of a difficult situation because the threat of further regulation is really bringing, especially the residential market, to a standstill. Peter Willem Ackerman of Schroders said that basically sales proceedings are completely halted during the summer, and the cranes have sort of disappeared from the sky because the government is preparing to regulate mid-level rents as well, not just social housing. Remember, social housing is very big in the Netherlands compared to other countries, something like 34% of all residential. But now they want to regulate mid-level rents, which means rents anything between 750 and about 1,050 euros a month, which means that in practice for an investor, an apartment in Amsterdam, which is now rented out at 1,800, would have to be rented out at around 1,100. So clearly that's a decrease in value and a strong deterrent to further investment. But the new rules, on the other hand, can also be a spur to activity in the Netherlands because a sell-off is expected before the end of the year, because another rule that is coming into force apparently is an increase in the real estate transfer tax for investors, which has already gone up from 6 to 8% at the beginning of 2021 and is now apparently set to go up to over 10% from the 1st of January 2023. So any investors who want to invest in the Netherlands obviously are likely to do so in the next few months. So that should be a spur to activity. But ESG regulations are getting tighter. That's another thing that is positive because the Netherlands has always been very active, very proactive on that score, but it's also making it obviously more expensive for investors. For example, from 1st of January 2023, the same date, all offices have to have a C rating or above. And at the moment, only 49% of offices are at rate C or above, which means there's a lot of work to be done in a space of a very few months to upgrade those offices. Otherwise, investors risk fines or even the offices being closed down altogether. So regulation plays a very major part in investors' decisions in the Netherlands.
Interesting to see in the news quite a lot of activity actually around the residential side. So independent living set to launch a 150 million IPO. Allied Irish backing Kojima's 100 million Dublin PRS project. And of course, we've got Tri Real Estate defying the slowdown with a 1.6 billion resi pipeline. So a lot of focus on that in the news. Dan, what have you been following?
Well, it's been a really busy week. The summer's definitely come to an end. Schools are back, and and of course the main headlines are really grabbed by the our Queen's sad passing, and our thoughts are with the royal family. But the industry is buzzing along, and at the moment, last week we saw the IAPA event, the Association of Amusement Park show in London. We also saw the Eurofund Logistics Capital Partners deal. They closed a major deal with Costco Wholesale to develop their first European fulfillment center in Torilla, which is in Guadalajara, about 75 kilometers northeast of Madrid, and that's for 140,000 square meters of grade A logistics space. So, that's along one of Spain and Southern Europe's prime logistic corridors. One of the biggest deals we saw was Prologis buying the 1.6 billion euro portfolio from Crossbay, which is of course Mark or distribution center portfolio. And, that portfolio was focused on single user sort of last mile logistics centers. And it's one of the biggest deals to complete this year in Europe. Elsewhere, we've been tracking, Brookfield Asset Management. They've mooted to have over $110 billion to invest currently. They're one of the biggest commercial landlords, and they've already invested about $30 billion in the last 18 months alone, including acquisitions of the UK household repairs provider HomeServe and a stake in Deutsche Telekom AG's towers units. But it's not the first time Brookfield has made significant investments. Of course, they always seem to make them during times of economic trouble. And according to Anuj Ranjan, who's the managing director of head of business development at Brookfield, he says there cannot be a better time to be a value investor, he said in a Bloomberg TV interview last week. They're not hinting at what they might acquire soon, but in real estate, companies that could be cheaply acquired right now include quite a few of the office and retail REITs, many of which have struggled through the pandemic. So maybe that's one to watch. Elsewhere, React News revealed that French hospitality giant Accor, owner of many of the hotel chains that we're all familiar with, they're actually going to be selling the Hoxton hotel portfolio, notably in London and Paris, with a 350 million euro price tag. And that kind of comes as Accor announced plans for the opening of its fourth hotel in London this December in Shepherd's Bush. The Hoxton brand launched itself in London Shoreditch in 2006. It's part of that global lifestyle hotel company Ennismore, at which Accor holds a majority stake. This deal within the hospitality sector, again, is one of the channels that we've been following. And lastly, a fascinating story that captured all of our imagination was the owner and founder of Patagonia, giving away his billions in favor of climate change. You have to ask yourself what brought on that decision. And interestingly, it was being listed in a Forbes lineup of the most successful and most wealthy businessmen in the world, and listed Yvon Chouinard as a billionaire and added him as one of the world's richest people. And he felt himself that was a failure, and that he'd failed his life's mission to make the world a better, fairer place. And that set him on his journey to sell. And he said, now it's not a case of going public. He said, we're going purpose. And so now Patagonia is owned by two entities, the Patagonia Purpose Trust and the Holdfast Collective. Both are still for profit, but the company expects to give $100 million a year to non-profit organizations. So bravo, Mr. Chouinard.
Interesting to see some of those kind of impact-related stories coming through, I think, there. Thank you, Dan. Thank you, Nicole. And look forward to seeing you next week for our regular roundup of the real asset markets.